Hi, everybody, and welcome to the weekly market wrap for June 16, 2017. This week was a little bit tougher to find a successful insider buying shares, but let's get into what we found. So, this week, the company that we're adding to the focus list is a company called Gladstone Land Corporation. Gladstone trades on the NASDAQ under the symbol LAND, and they are a real estate investment trust that deals with agricultural land management. Now, it's not one of your more common names, and it doesn't trade a tremendous amount of volume, but enough to get in and out for the average investor. We're adding the price at $11.27, putting a target on this company up at around 14 bucks, whereas our risk tolerance for this company is going to be about $10.40, or essentially if it breaks these lows right around that level. So what'll happen is we're adding this because the CEO namesake, David Gladstone, bought $227,000 worth of the stock at $11.38. Now, he made that purchase on June 14th. Now, what you're looking at here is a weekly chart. So every one of these candlesticks represents 1 week's worth of trading. Now, if you take a look here, back in the middle of March, we saw a nice little drop, and then it started to just basically trade in a range. And that's when we saw the CEO step in and buy shares. Why we're following him is his purchase back in December of 2015, which was right around this level here. He stepped in and purchased shares at $8.49 per share. After another half a month going lower, the stock actually rallied to a point where if you followed this trade for 7 months, you would have been up over 30%. So that's obviously showing some signs. The other sign is it's always positive to see him buying at this level, watch the stock go higher ultimately, and him make another purchase again. So we're putting this Gladstone or LAND on the focus list. Second thing that I wanted to take a look at was just the overall market. So we don't have that continuous uptrend in the short term that we've had. What we're looking at here is a chart of the S&P 500 and or the spider ETF that represents the S&P 500. And then what we'll see on this chart is that during the days of this week, we wound up lower a little bit, but overall, we're still kind of hanging along on this range, right between 242 and 245. So that's kind of a consolidation phase. Doesn't necessarily tip its hand, but normally when a stock consolidates after an uptrend, it resumes the uptrend. So that's kind of what we're hoping for, what we're looking for, what happens on a normal occasion. The other thing that we're going to look at is the overall NASDAQ 100 or the triple Qs. Now, this shows a little bit of a different story. This has outperformed the rest of the major indices over the past 6, 7 months, and now we're getting a bigger pullback. So we have a bigger outperformance on the way up and a bigger pullback on the way down. Obviously, we had some big news out today that Amazon is buying Whole Foods. Tech has been an absolute monster. They've been the ones, the tech companies, the Amazons, the Teslas, Netflix, Google's, companies that just have been doing quite well in this market. So um, we haven't taken any companies off this week. None of them have hit our price targets or our projected risk targets. So we're going to leave everything that we had on, including adding the Gladstone Land Corporation. And I wanted to talk about gut feelings. Okay, so a lot of times I speak with people and they're telling me, well, they think the market's high or they think this Bitcoin could go higher or whatever the emotional gut feeling is at any given time. I've been doing this for 17 years. And it doesn't mean that I know everything or I know where the market's going. In fact, I have no idea where it's going. But what I've learned to follow is what I know, not what I think. Okay. And follow me on this one because it's kind of important. I know that I don't know where the market's going. So therefore, my gut does not make me money. Sometimes it works, sometimes it doesn't. In the beginning of my career, I found out more often than not that gut feelings can change pretty quickly depending on the uh, the wind in the market. So rather than follow gut, how do you make money if you don't know what the heck's going to happen next? What I do, and this is how I came about with this little service or newsletter, is I follow things that have worked in the past because human nature tends to repeat itself over and over again, despite how smart everybody thinks they are. So everybody likes to think that they're smarter than the next guy, but if you take all the people together, it's actually impossible to be smarter than the averages. I mean, the average person can't be smarter than the average person. It just doesn't make much sense, right? So how do I separate myself from everybody else? Number one, I don't use my gut feeling. People ask me all the time, well, what do you think? You think we're gonna have a pullback? I have no idea. Maybe the market goes up another 20%. Maybe we get the pullback everybody thinks down 30%. I don't know. I don't care. Okay. This is what I know. I know that if we were able to follow the overall insiders, okay, over time, we get a better result than the overall stock market. Now, most people can't outperform the stock market, which is why this becomes such a great situation. So what you're looking at on your screen right now is a National Bureau of Economic Research report that was done a while back. It was done in 1999. But what they found in in conclusion was that insiders know more about their own companies than just about anybody else, and they get better results. Okay, now this was done in coordination with the Harvard Business School. And what I wanted to show you is if I could just scroll down, it's a 58-page, 20-year study with a whole bunch of statistics in there. But one of the main things that I wanted to show you was this chart right here. This chart shows us that the annualized returns for portfolios that just followed when insiders were buying shares was 23% per year. That's a pretty nice return. The annualized returns for the value weighted market in their study was 15.6%. So what does that mean for us? That means that in essence, insiders were getting a better return by 7.4% a year than the overall stock market. Now that doesn't seem like a big big deal year one or year two, but as time goes on, it tends to become a pretty heavily compounded advantage. So this chart that you're seeing here is the actual chart of a dollar invested into insiders that are buying their own stock, which is a dark black line. That dollar in a 20-year period would have turned into $80, okay, which is pretty significant. And then you see another example of if it would have been in the overall stock market, which is that thin black line, we would have turned the dollar into 20. Okay, so both things are really great, but there's a huge gap of outperformance here. Now, am I going to make $80 for every dollar that I invest? It's possible. That's what this is telling us. But even if I'm half as good as every insider because I don't do every single trade, I'll be pretty happy in 20 years getting $40 for every dollar I invest. That's where this strategy is derived from. These people are smarter than me. The business professors at Harvard and UPenn that have conducted a 20-year study, I have no problem admitting they're smarter than me. But the point is, are you smart enough to know that you don't know? And if you could do that, if you could put yourself in a situation that you're not trusting your gut feeling, you might be able to outperform the market. That's what I do. Doesn't mean it works for everybody. I'm sure somebody's gut out there outperforms the market every single year by 17%. I don't know. Mine doesn't, so I have to rely on things that have been proven to work in the past. I just wanted to kind of make that difference between a statistically advantageous strategy and one that people have the feeling that the market's too high. So that's what I base my entire strategy on. I know I'm a little long-winded here, but I thought it was an important point. Um, I hope you guys have a great weekend. I wish all the fathers out there a happy Father's Day. And I just want to let everybody know I really appreciate you guys tuning in. It means everything to me. Thanks so much.